Hello. Today we're going to start doing our first journal entries. Now today is one of the most important days in the rest of accounting because journal entries are going to take us pretty much through the rest of the year. So the title of today's slide is Journals, Source Documents, and Recording Entries in a Journal. This journal is something that is a basic story of what has happened in your company. So as we do these, I'm going to kind of click through and get you used to this. So first let's start with some definitions. A journal is a form for recording transactions in chronological order. Emphasis on the chronological order part. Accountants care about dates. Dates are extremely important and everything has to be recorded in the correct order. Journalizing, which is a made-up word, is recording transactions in a journal. We journalize pretty much every day for the rest of the year. It's one of the most important things. It tells the story of the company and you really need to learn how to journalize. A special amount column is something we're going to use today. It's a journal amount column headed with an account title, and you'll see what that means in a little bit. And there's also a general amount column, which is a journal amount column that is not headed with an account title. And once again, you'll see what that is in a second. As we click through, we've got more entries, which is just crazy. The first one is entry. Information for each transaction recorded in a journal. Every separate journal entry we do is a separate entry, if you will. The next term is double entry accounting. This is the recording of debit and credit parts of a transaction. You remember me talking a while back about how every single transaction must have a debit and credit. That's what double entry accounting is, ensuring that you have a debit and a credit. A source document is a business paper from which information is obtained for a journal entry. And these are super important. Source documents are things like receipts or checks or anything we can use to cross-reference to make sure that what we're putting in the entry is important. A check is a form of source document at the bottom, which is a business form ordering a bank to pay cash from a bank account. We may not think of it that way, but that's ultimately what a check is. It forces the bank to pay cash from a bank account. Oh my God, there's more. You've got an invoice, which is a form describing the goods or services sold, the quantity, and the price. A sales invoice, which is an invoice used as a source document for recording a sale and account. Get used to seeing this. If you see a sales invoice, you know you're going to use accounts receivable or accounts payable. A receipt, a business form giving written acknowledgement for cash received. And finally, a memorandum, which is a form in which a brief message is written describing a transaction. Literally, a memorandum is a note. Now, I threw a lot of definitions at you. The main thing you need to learn today, these definitions will come back at some point, but I want to focus on getting the journal entries down before anything else. So the journal entries are what's really important today. This slide was intentionally left blank for a quick rest, so rest yourself, recover, because we're about to journalize and it's going to get crazy. So let's go. First thing is a 5-column journal. A 5-column journal looks like this, and it's called a 5-column journal because you got 1, 2, 3, 4, 5 columns. The general columns being 2 of them, the sales credit being another one, and then the cash, debit, and credit columns being 2 more. The general columns are the general amount columns. Those are the ones that do not have an account at the heading. Sales is a special amount column because sales is its own account. Cash as well, special amount columns. So as you look at these, this is what a check looks like. I'm not going to let you see that too much because you probably have seen one before. If you haven't, hit yourself on the head now. You've got a sales invoice, and then other source documents include like a receipt or memorandum or calculator tape. All these things tell us something that's happened. So let's start journalizing. The first thing we're going to do is talk about receiving cash from an owner as an investment. In this, I hope you realize that cash is a debit because cash is increasing. And then obviously, by default, our capital account must be a credit. So when you look at this one, you're going to see a couple things. First and foremost, we're going to put $5,000 as a cash debit. That's the most important thing. When we have that $5,000 cash debit, we know what we can do. Let's go through these steps that they give you, and I'm going to click all the way through to 4. And what you're going to see is, first and foremost, we write the date in the date column. It's August 1st. That was given to us in the directions. The second thing we're going to do is we're going to write the debit amount in a cash debit column. Right there, $5,000. We know cash is a debit because cash is increasing. Then we record the credit amount in the general credit column because we know that then we have a credit. It's not a sale, so it must then go by default in general credit. And finally, you write the title of the account, in which case this is Kim Park Capital, and the account title. This is the structure we're going to follow. You'll notice at the end we write the source document number in the document number column. That's all good and great. This is going to seem like a lot right now, but you'll get it more when we start doing these. Paid cash for supplies. Once again, we've got to think about this right now. Supplies is increasing. It's an asset account, so that must be our debit, which means cash is our credit. So when we do this, it's going to look like this. And I'm going to click through here. It's on the 3rd, so we write down the 3rd. Notice we didn't write August. We'll talk about that in the problem. Cash is decreasing, so cash is our credit. We never will write cash as an account title because cash is already written here. Supplies is not written anywhere on this page over here, so supplies must be written in account title then. In this case, supplies is a debit. So these general columns right here only apply to the account title. And if this is all going over your head, just realize we're going to do a lot of these and they'll make sense in the end. So I'm going to go ahead and stop here, give you a quick break, and we're going to walk you through how to do the problems in Applia.